Hey, Colorado Springs. This is Jenny, and I am back with another episode. And we have Leah as co host today. Leah, how's it going?
Good. How are you, Jenny?
I'm doing well. And so, our guest today is Michael. And you guys might remember him from maybe a year or so ago that we had him on. And he had just completed his first house hack and was doing really well with that. And he has uh, extremely catapulted his investment portfolio since last speaking with him. So we wanted to have him back and just kind of talk about a bunch of different topics. So, Michael, thanks for coming on.
Oh, it's always a pleasure. Love chatting with the team. It's good times.
Yeah. So tell us when we last left off, you just completed your house hack. You had everything up and running. Everything was going well on that, but you were about a week away from closing on your first fourplex.
Right.
So maybe let's start from there and kind of we'll talk about where you're at right now.
Okay, so it's been an interesting progression. Actually, it worked out really well. Uh, I started with the house hack, which is like the fundamental first move, I think, for anybody. Yeah, unless you have a certain situation, maybe you're like married or something, and that's not going to work, in which it's like a duplex move, something like that. It's been really good. The house hack so far, there hasn't really been any problems. The biggest problem is the kitchen. There's a sink. It's a shared sink. Luckily, I don't ever use it. I specifically just live downstairs. I set that up, so I'm never at fault for anything up there. So it's like, hey, whatever, figure it out, people. After that, yeah, I was closing on Bonita Village, which was a fourplex townhome style. It was really nice.
Mhm.
There's decks out there. Everyone has a little backyard as well. It's 2 bedroom, 1.5 bath. Very large square footage. I think each unit is I want to say it's like over 1,000 in each unit. But it's bigger than your normal one, and it's kind of nice like that. So that one at that time, oh, what did I pay for that? Yeah, it's kind of been a little while. I remember I had paid a certain price, and then it got appraised because I paid cash for it. It was empty, which was one of the reasons that I paid cash for it. Because coming to Colorado Springs, I didn't actually know how hard or long it was going to take to rent a fully empty fourplex.
Mhm.
Took about 2 weeks. Yeah, it was pretty good. I thought that was nice. Like finalizing on one of the units took a little bit longer because it was Section 8. So that was my first Section 8 in Colorado Springs.
Okay.
Yeah, it got appraised at 875, pulled the money out, so it got up a little bit. That ended up being six. It was six like 0.325%. And Bonita is actually a lower cap rate place because first place I wanted was something that was really low risk,
Mhm.
right? If I'm going to be buying places, I'm really just looking to park the cash somewhere that is going to hold the value via inflation, like just inflation adjusted returns, have it all good. It was a good one to start with. Yeah.
Yeah, absolutely. So let's kind of like back up on that a little bit. Like you said, it's, lower cap rate, assumed lower risk just because
Mhm.
the property itself is a really quality place. It's located in a very central location. Like you said, townhome style. Everyone has their own balcony. Everyone has their own yard. Like that is highly desirable to tenants. So I think that it's just kind of one of those steady type of properties. And then also your strategy for acquiring it was unique in that, like you said, you paid cash for it and then you did what's called a delayed finance. So you paid cash to acquire the property and then basically placed a note on the property. Was it within a month after closing, or there's a timeline? So check with your lender on that. But it's not considered a cash out refinance if you do it within that certain period of time. So that is a strategy for people that have, the cash on hand to be able to act quickly. And during that time, it was still a really fast moving market.
Mhm.
So that gave you an advantage for sure.
Yeah.
Yeah.
That
So
one
Uh,
that one you paid 875 for.
I remember it getting appraised a bit higher, so then there was a bit
Mhm.
of a gain in pulling it out, the cash, which makes the debt service, it's like fairly high debt service for that. I think I've structured it so I'm just about like a break even. It's like somewhere around there.
Yeah.
Yeah, and that allowed me to purchase another property, the following property, fully paid off. So then all my cash flow comes from that place that actually has a higher cap rate. And that was Western. That was an interesting one. I think, you could probably speak to that about how that was a, sold by owner type of situation, and she happened to be a lawyer.
Yeah, Leah, why don't you tell us a little bit? It was off market, in network type of situation. So yeah, why don't you tell everyone about that whole story?
Yeah, basically, I negotiated with this for sale by owner attorney for like all of last summer. Yeah. So, but we got it done. That's the most important thing.
Mm-hmm.
She initially came to our group because she wanted us to list it. But we couldn't come up with we could not come to an agreement on the listing docs. She just, wanted to omit a bunch of clauses. And of course, we're not comfortable with that. So we were like, we're good.
Mm-hmm. Not the right fit for you in this
not
case.
the right
Yep.
fit. Yeah.
Mm-hmm.
So then I told her, I'll still try to bring a buyer, even though I knew that was going to be rough negotiations as well. But it was such a good property, and it was like perfect for Michael because it was right down the street from his house hack.
Mm-hmm.
But like 10 minutes,
It's
probably less.
Well, man, I haul on those motorcycles, so it's real fast. Like, yeah, I can go to there and then to Bonita. I want to say in 12 minutes.
Yeah.
I can pass by the first place, do just like I blow by, and then bam, I hit the next place, do a circle around there. And now with the final place, then I just go on Powers, and then that one takes a little bit extra, but it's like at the very end. It's still in my 15-minute radius rule for self-management, and it's solid. Yeah, I'm actually very happy with how it's worked out.
So we brought, we presented the offer to her so many times. I mean, we had to redo this thing. It went on and on, right, Michael? We finally got to the point where we were we were just going back and forth, back and forth. Finally, we were like, these are your three options. We were like 1, 2, and 3. And she just was like, okay, we can do 3 or whatever it was. And I was like, oh, all we had to do is give you an ultimatum or we're going to walk away.
Yeah. And I love that you brought that up because that is actually a pretty powerful strategy when you're kind of at a stalemate.
Mm-hmm.
You're almost right there between buyer and seller, almost there. Just give the seller some options, and sometimes it makes them, feel like they have more control of the situation, and they're kind of more willing to play ball with you at that point. Mm-hmm. So,
and that's all it was a control thing for the seller.
Mm-hmm.
It was really silly. We won't even get into all of it, but it was, it was really silly.
I'm just remembering. Yeah.
Yeah. She didn't want to have inspectors in there or something like that. It was something with inspection. She wasn't comfortable with them being
the
in
liability.
They broke something. Yeah. The liability. Yeah. So we even had our inspector reach out to her and provided his insurance and everything.
Mm-hmm.
We really had to reach, going in, and then she ended up paying for the inspection and being there. And then didn't we credit her or we added it onto the purchase price or something?
Yeah.
Silly.
She wanted me to soak up all that liability. And I was like, look, just do it yourself or I'm not doing the deal. Figure it out, because in the hypothetical situation that an inspector has a ladder, falls on some old woman, yes. I'm ruined for the rest of my life. I guess an umbrella insurance policy, does that cover that in that situation? I don't know. It's kind of
were just afraid.
I have no idea.
Me and Michael, we were just sitting there we're dealing with and she's a real estate attorney. So we were we're dealing with a real estate attorney. We will have nothing to our name if something goes wrong.
Yeah. I was like, no.
Tread carefully here.
The property's good, but it's not that good, right?
Yeah, I know. We wanted it, but we didn't want it that bad, right? So, but once we finally came to an agreement and went under contract, she actually was pretty easy to work with. We got everything on inspection that we asked for pretty much. Like she was, there was a tenant that had trashed one of the units. Tenant had only been there for like a month, trashed the unit when we went in for inspection. I don't know if the girl wasn't expecting us to come in or what, or didn't know maybe. But her place was trashed. And so we were like, yeah, we need that situation to be taken care of. She really took care of everything. So once we were under, it was smooth sailing. So that was good.
So what have you done with the property since then? My understanding is that everyone, well, I guess a couple of the tenants stayed. One of them moved because of military, I believe. And then the person that trashed the unit that was delivered vacant to you. What have you done to the property since closing on it?
Right. So there was 2 move-ins, like you're saying. It was interesting because I had 2 tenants in one lease at Bonita. There was like Space Force guys. They had a disagreement. I ended up moving one of the guys over into the other unit, and he like, we already had a rapport, so I was actually able to get really strong rent for that because he didn't really want to rent. Yeah, he was just like move me into another place.
Yeah.
Yeah, so that was great. And I was working on the remodel because back when I was younger, I did building maintenance and remodels. And so like I'm over there after my day job as a senior software engineer. What I do is like, bam, I'd shoot over and then I'm working until like late at night. And then I'm coming back and I'm just doing that. So I'm very much like a do-it-yourself or bootstrapper in the beginning until I'm like from self-employed, like actual big business type of like, quadrants shift. So remodeled it, brought the gross rent in each remodeled unit up 48%. So got them up to $1,200. It was significantly less than that.
Yeah.
If there wasn't a remodel, I think I'd be around 1,000. So like numerically, it makes sense to me. I did the bottom unit. He moved in before I even finished. Like that's how it was. Such good timing. Like that's how good it was.
Yeah, and I think that speaks to you as a landlord that clearly your tenants like working with you in that aspect to the effect that he came to you with this issue, and that's also a benefit of having many properties or many units is that you can help people in that situation. So I think that was win-win for both you guys.
Totally. Yeah, totally. It's been good managing. I really enjoy it. Everyone's like, "Oh, I hate property management." I'm fine with it. Like,
yeah.
If the comp was the same as being an engineer, like I would just be all right. Like, I guess I'm going to be a manager for a while and just do that, and then I would just go full scale and just run the whole thing. But yeah, I don't know. I like having the rapport with people. It's like you show up, you own the place, you know the person, you have the chat, you like. It's different, It's like I know this person to a certain degree, and and they know me as well, and they're like, it's good. There's a certain level of trust and respect that just happens when you do it like that.
Oh, absolutely. And when you're attentive to the tenants, and if they come to you with an issue, a maintenance request, and you actually get it taken care of, that rent check comes on the first every month because they respect you back. So it's just a really good, to and from relationship style, I think, in that case. So tell us a little bit about the financing on this one. You said that you bought it in cash. Do you still have it paid off, or are you going to place debt on it, or what's the plan for that?
Yeah. So, I kind of thought this was going to be the last fourplex that I was going to have while rates, while we're in the reduction of inflation. But surprisingly, it wasn't. That being said, the money is just sequestered. It's just trapped in there. And I hate having trapped money. But I figure, okay, we're in a recession, or we're effectively, they say, oh, we're not, but I think we are, type of thing.
Yeah, who knows, right? We are where we are at this point.
Right. So it's really like a defensive move. I could lose my day job tomorrow and I'm good. And the weight that lifts off someone's shoulder like that is it's pretty substantial. I actually don't go full leverage ever, just so that I always have that freedom to be able to be authentic. If you don't have a choice, you can't actually make authentic choices yourself. You know what I mean? You're like, they got you.
Yeah.
So, I'm just keeping it in there for now until rates get down to, I want it below 6 before I really pull it out.
Yeah. And I think that's fantastic. And I think what's interesting about your particular story is that you are still in acquisition mode and you have the paid off property. So like, I like the fact that you are kind of mirroring both strategies just in a very methodical way of looking at it. Cause, I've had people come to me and say, why are you paying off some of your properties, but you're also acquiring more properties. And I'm like, well, it makes sense in my head, like from a defense mechanism standpoint, but maybe, not so much for, just general strategy. So I totally agree with you. I think that, kind of playing both sides a little bit, especially right now is a good idea. So
I agree.
Yep. So
it helps as well because that's a value add property because I can remodel every single unit. So when it's paid off and I'm in there for however long, like psychologically, I'm not like, I need to just hustle as hard as possible. I'm not going to be putting in like, some 70, 80 hour week type of thing if I don't have to.
Yeah.
You know what I mean? Like, it's not like I'm dying about it.
Yeah.
So strategically, that was fantastic. It was a higher cap. It's about like, I think it was 6 something or just about 6. And then all the value add potential. The tenants are great.
Then transition to, you're like, oh, I didn't think I was going to buy another fourplex after this. And now you close on your third fourplex, what, in a week, couple days?
Next week, I think.
Yeah.
He's so funny because he's like, he texts me and he's like, hey, do you know of any fourplexes? I might like buy one this year. And then it was like 2 days later, he's like, yeah, I want this one. I'm like, whoa, that happened quickly.
Yeah. When I know what I want, I go for it like 100%. Yeah.
So what transitioned decision process wise to get to that?
Okay, well, there's a couple things. First off, having Western fully paid off, as from like a portfolio standpoint, not great for the appreciation, right? And I know there's a lot of people who are big into like passive real estate income, and we're kind of at the reduced appreciation just right now. In future, it's all good when you direct own, the numbers look fantastic, but the thing about it is I still need more leverage. So real estate outperforms to me in my mind because the amount of leverage you can get. Yeah. For me, I have all that experience with financials in the stock market, trading stock options, doing like different type of derivative strategies and stuff. So I can actually generate quite a lot of cash flow that way in any like a neutral to an upward market. I don't typically do shorts or anything like that. So downward, I pull the money out into like a safer investment. But I can outperform the real estate cash flow for sure, like 100%. Yeah.
But you're referring to all the other benefits of real estate, meaning, a levered return. So if you buy something for 100,000, put 25K down, but then it goes to 150,000, you've just made $50,000 equity on that based on only putting a quarter of the value down. So like there's no other asset class that can provide that type of return.
There was the Schiller Home Price Index. I was looking at this, I guess it was for like the last 50 years or so. And I was looking at the inflation adjusted one, right? So one of the reasons I'm in real estate is because I think the dollar is really, it's circling the drain type of thing. We're kind of at that point in an empire, right? Where like things are really inflated, and I'm kind of wondering about the macroeconomics of like what they're going to end up doing. That being said, the inflation adjusted Schiller returns in the last, I think 40 or 50 years, it was 10 to 15 years in which you had 100% return, or roughly about that. Like it doubles, right?
Mhm.
So that's not even accounting for inflation, and that's not accounting for cash flow or tax breaks. So like, yeah, when you're out here, like fixing toilets or whatever the heck people are going to say you're doing, yeah, you're getting paid off. There's a reason you're doing it, type of thing. So,
Oh yeah, yeah.
yeah.
Based on the headaches that I've had over the past, I don't know, 6 months for my portfolio, if I didn't truly believe in the outsized benefits that real estate provides, I would have liquidated that just based on, the nightmares that we've been dealing with. But I mean, absolutely, there's just no other asset that, will give you that type of benefit in multiple different ways. So, so you needed to lever yourself. You needed to kind of do a little inflation proofing to your portfolio. So you found this fourplex. What attracted you to it? Was it mostly the radius to your existing portfolio?
It's one of the few that works. Like it just, nothing else works. I can't believe I found such a high cap rate building in Colorado Springs within my radius. Like I'm in a decent neighborhood, where I live personally is like good.
Mm-hmm.
And then that radius that I talked about is like 15 minutes is still pretty good. So those cap rates, I'm expecting them to be a little bit lower because the buildings have lower risk. This building, if you look at the overall portfolio as a whole, all right, I've gone from higher and higher, like lower to higher cap rates, right?
Mm-hmm.
And it's really worked with the increasing rates. And this one had every problem almost. I mean, this building was like seriously problematic.
Mm-hmm.
The radon peaks at 15 ppm. I'm like upset that there's tenant, like there ought to be some sort of federal law where there's a certain testing period interim for like so many years, every 3 years or something. You got to get some sort of state license test. And, these people are sucking down a bunch of radon. It's awful. So you got that. Then you got a bunch of structural damage because the place is so mismanaged. The gutters are leaking. There's differential settling. You got cracks going up and down. And, they say they fixed it, but the place is still, it's still the slab is still absorbing all that water. When we were walking in there, that unit on the bottom, substantially worse than when we were there later when it was dry, because the slab is just like literally soaking up all this water. It's ridiculous. So
Which is almost comical, like you mentioned, the mismanagement of the building. Just to kind of give a couple little bits on it is, like you said, installing proper gutters and drainage, just getting some of those little tube things that just bring the water away from the foundation. Cost $20 at Home Depot. You didn't have
tenants were like, they're like, we'd never see them.
Yeah.
They've never seen
the tenants when we were doing a showing, and they were like, yeah, they never come out here. There's like a homeless camp out front.
Yeah.
Like,
one of your tenants didn't have a lease, which
they still don't.
That just is mind blowing to me.
Yeah.
But
okay. So
that's where you're making your money is.
I'm
all
going
this.
in there, bringing like the landlord, like knocking problems out, and you got to be in there though. You got to be like active management. That's where I have the competitive advantage because that's what I do.
Yeah.
So, and then the neighbor has trees over. I don't even know how the place is actually insured because there's so many trees overhanging the place that, good luck. Their insurance company just doesn't come out and look at the place. It's the only way.
Yeah. Or they don't have insurance.
Yeah. That's what I, everyone's like, oh yeah. Here's their insurance, that they have or whatever. But I'm like, I don't know,
which I highly do not recommend doing. But that's their problem. So
But that's what I love about Michael. Like, he steps into a place and he just like wants to improve the property and just like keep
the tenants'
lives.
Yes.
So
and,
it's like, and that's the type of investors that we work with. Thank goodness. That's why he just makes the whole investor name, I feel like, look better and
100%
the communities. So
I agree with that. And just like your vision for this little building is just I can't wait to see it in a couple of months after you've
it's
gotten into
so
it.
good.
Yeah.
Yeah.
You'll have to have like a little housewarming for it.
The numbers though are actually like super decent. I mean, they are like it cash flows. I want to say a few thousand a year.
I think
right?
it's going to be more than that.
Yeah, I ran it really conservatively with a high rate, and I think you got a better rate. What rate did you get on that?
Right. Okay. So what were the numbers, right? So like let's first start at the building numbers, right? They had it up 760 2 months. Then they remodeled the units inside. We're trying to sell it, still didn't sell it. I came in, I lowballed real hard. I said what, I think I said 725. Yeah, I'm like, look, knock this down.
And we did like 14K concession.
Yeah, max it out, because this is like, you need to pay a price for running this place so terribly. Like, I'm upset. I don't even live here. I'm upset. So yeah. It'll be interesting with the homeless encampment. I don't know what that, like, I haven't had to deal with that in Colorado Springs. Back in my hometown, San Francisco. Yeah, a lot of that, but not so much here. Anyway, 760. They countered 744 or 747, which was very apropos for Airport Road. I got them back down to 744 plus 14K concession, so like net 730. The rate ended up being 7%, and we had mocked this at 7.25. So like the numbers are actually pretty solid, and I don't think the repairs will be that expensive. There's a lot of them, but I don't think they're going to be like,
they're mostly cosmetic from what I was observing.
In some, like, we had a roof over there. They need to add like a couple more gutters in the front, like nothing major.
Yeah. Right? The tree trimmers are actually doing an estimate right now.
Oh, are they?
Yeah.
Cool.
Yeah. I mean, they don't have to actually be on the property to do an estimate. They can walk on the public street and look at the tree, and so I'm going to get that in today or tomorrow, and then I'm going to have them do it ideally on the 4th. Yeah, day after closing.
Yeah. Yep. Just to really mitigate that liability for you on that. So what did you guys negotiate for inspection?
Oh, we just asked for a small list of stuff. I think they agreed to everything, right, Michael? Except for one thing. Something with the electrical. We had our electrician out and he was like, no, it's all good. You don't need to do anything to this. He just gave us like a quote to upgrade panels if he wanted to, but he's like, you don't even need to do this. Like, all this is fine. So it ended up working out. I mean, we got everything we asked for. We didn't ask for any more concessions because we didn't have any. And I think we did a radon mitigation to the vendor since we were pretty much maxed out on concessions. So we got that. Pretty much got everything. Yeah.
Was the other stuff that they were going to have somebody fix it, or? Okay.
Yeah, it was like boiler cleaning, sewer cleaning and rescope, just stuff like that,
Okay. Yeah.
Carbon detectors, just little stuff.
Yeah, they did not have carbon monoxide detectors in these units either.
Which, just fun fact on that doesn't even need to be an inspection objection item, because the contract to buy and sell like requires that. So so anyone who's out there and is buying something that for some reason doesn't have the carbon and the smoke, like make sure you point that out to the listing agent, because they need to deliver it to you with those in place, because it's very dangerous if people are living there. Okay, well, that was an amazing summary of your past year and a half or so of acquisitions, but I kind of want to ask, why Fourplexes? Why are those your property of choice?
So when I was doing building maintenance, I found that it was the drive time that really crushed things. And San Francisco is just 7 square miles. So it's not like it's a big city, really, but it reminds me that it takes forever to get someplace. And that's just like Colorado Springs. It's like I'm in the Twilight Zone. Somehow, like 5 miles, it's like half an hour or something. I don't know. I still haven't figured that one out. But I like the density. I like the lower risk. So let's say there's an issue in a single family home, or you have to remodel that home, or for whatever reason, it's not rented, right? You lose out on, that's a lot of risk to me. So I'm willing to put in a little bit more management for the lower risk of just having multiple doors. Now, I guess you can say, hey, all right, well, the building explodes, like pipes, blow up, the whole thing's on fire. Yeah, I mean, this stuff does happen. So there is that risk, of course. But I just growing up, I'm a multifamily guy. Like, so when I was doing building maintenance remodels as a younger person, it was all higher density. And I think my very first job was actually being a janitor for like 2 very large apartment buildings. So those were, I want to say they're almost 90 units each.
Wow.
So I'm just very used to it as well. It's very familiar. And I like that. I also like having one roof. From a self-management perspective, I like one location. In fact, if I could just have one giant complex, I would feel better.
That's what I was going to ask you. Yeah. Would you rather have 3 fourplexes, or would you rather have, just
20.
a giant 20 unit or something? Yeah.
20 unit.
Yeah. Well, then you go into commercial loans. You don't have a track history. Then all your eggs are in one basket. So like just starting out, or just kind of, I'm a year and a half in here. So I was kind of seeing how it's going, deploying X amount of capital. I didn't have all this capital at the one time either. It's not like they could just come in and swoop a 20 unit building. Like, even if I had financing from like some angel bank or something, it just wouldn't work. I wish I could finance 40 units. Like, I really want to get to in-house management scale. The problem to me is management. It's like, that's the actual problem that I'm trying to solve. It's not like some other property thing, or like certain unit count based on X amount of like income just for like my personal goal or something. It's really like, now my problem is I need to run a big business. How do I do this? Because I can't hit that 40 on my own.
Yeah.
Not right now.
Yeah. So let's kind of transition to something I wanted to touch on, is the idea of in-house management. And I know you brought it to my attention as an idea, or, possible combination of like couple investors that have many properties, like trying to figure out, what the components of that would look like. So can you explain to everyone just what in-house management is? Because I don't think it's a very familiar concept to many. Like, most people think it's either self-management, or you go to a third-party management company to manage your property. So what is in-house management?
Okay, so in-house management is when you hire your own property manager, right? So now you have an employee or 1099 contractor, whose expectation is to deliver. So I know there's the time requirement where you can tell, a W-2 employee, like, you need to work within these hours. 1099, you can't really do that. But if it's clear that expectation, effectively, that occurs, right?
So basically, so you would have someone either on payroll, or, a personalized employment contract of some sort, or not employment contract, a personalized contractor contract, of basically saying, hey, I need you to do these tasks, which could include minor maintenance, like trade specific. If it is trade specific, plumbing, electric, HVAC, you need to coordinate and hire it out. You need to screen tenants, answer their concerns, collect rent. Is that kind of, just putting all the onus onto one person to do all that? And what would be the benefits of that versus, I think it's obvious what the benefits of that compared to self-managing would be, is getting your time back.
Sure.
So what would the benefits of that versus a third-party manager?
Okay. I'm going to give you an example. Okay. A little bit of a story here. So, I have family in San Francisco that built buildings, right? They were builders. Okay. They're just immigrants. We're immigrants, came over, from Ireland, and they built a bunch of buildings. Okay. So then my grandfather had a bunch of kids, put them all in the trades, and then they worked on said buildings, right? And then what happened is they formed an in-house management company. And then they worked in that management company, which is kind of still like self-managing. However, then they had employees. Okay, so now it's not like the entire family is running that in-house management company. And then I worked in there. So seeing the difference and understand, like being in that business, doing that and knowing the people in there and like knowing how they all operate for the scale that they had at the time is it just seems like that's the way to do it. Like I've seen the model, like I know what they're doing. I don't have the scale that they have, but can we get some sort of like association of landlords together? You don't even need like some sort of kind of partnership structure. You can just pay the manager directly. It's not like we're all tied together really tightly legally. But the thing about it as well, when you have other people, is you have a support system. So obviously that person is not going to be at work every single day in a full year. Okay. So it being like a small boutique type of management solution, there's going to be a high degree of communication, ideally, for when they take off. Like it would be ideal if they can structure and plan ahead of time. Obviously, there's going to be sick days, but at a certain point, you have to understand that there's almost a rotation. Okay, so in this in-house management that my family did, everyone had the calls. Okay, and they rotated the calls every 2 months based on, there was like there's 4 uncles and my mother, right? And so they all rotated the calls. And if you had the calls, you're on call. You got to show up if there's a problem. Well, if just one single landlord in this association is in Colorado Springs at the time when a manager now has a problem, well, there's actually someone there. And because there's an association, it's not like you're on there all the time. You have the manager and, there's a certain amount of communication and agreement that people can do to like rotate in and out. Winter, to me, is super high risk. You have to have someone on there. Somebody has to be around, even if there's a sick person. Yeah, like I'm terrified of winter here.
Mm-hmm.
I would prefer not to be here in winter. But even if I had a manager, I don't know. I might be around for a little bit. I just might not be dealing with the stuff. It depends on the solution and how we go, like how it would go about. So something like that. And I know that you and we now have a similar management platform, which like going back, I've kind of had this plan for a little while. And so it's like, if we use the same management software,
mm-hmm.
then the manager now can just go in and out easily. So there's a bunch of standardization that has to occur and processes. Lastly, I'll say that at like a 40 unit size, really that's like a part-time manager and a part-time maintenance person. It's not really a full-time manager. So it's what that employee, if you're going to hire a full-time person, hypothetically, because you got to lock them down. You got to pay them. Right? The full rate. It's hard to find another person and it gets a little messy. So you're not really going to outcompete third-party management. You might get 8% on that rate, but the quality of service on that is going to be substantially different. And if that saves me $30,000 because of flooding or some stupid issue, because it's like clown world with some management companies, I can't take I can't take it. So it just like that. They have a lease. It's not signed. They moved someone because there was a fire at the previous building for this new acquisition. It's still not signed. Luckily, I just have like a personal rapport because I ended up meeting the guy and his family and we've like discussed. So I'm like not really worried about it. But there's so many questions. I can't even imagine the liability of not having a signed lease. And then you move someone because of some sort of like fire disaster. What is that about? Yeah. Is that a mismanagement problem? Is there electrical? Like what? The guy said it wasn't his fault, so I'm just have to take him at his word because obviously management company isn't even going to talk to you about it because who knows what they're doing.
Yeah, you're not their client. They don't even know that this family is living at this building, and so basically, kind of the punchline for the in-house management would be there's no discount in terms of service from a cost standpoint. But I know you were mentioning there's the hidden costs in terms of like frustrated tenants, so higher vacancy, stuff like that. And then basically just paying to substitute the premium level of management service that you're providing to your properties, to just kind of outsourcing that, but paying for the premium quality.
Yeah, that's essentially what it works out to. Right now, I do the management and the fixes. So for me to do this, I really need to get lower rates on and refinance for the numbers to work. That's just kind of how that works. I'm not worried about it. I think at that point in time, I will be very much ready for the freedom. I would have to buy another building as well because I actually want 4 fourplexes.
Okay.
I think that's a good number where I always keep a certain percentage of like my net worth in stocks in other sources. So I'm never actually 100% into real estate for myself. I know a lot of people are, and it's good to specialize. So if that's your type of thing for the long term, I could see that working. At 4 fourplexes, that's kind of where I'm like out of money as far as my personal portfolio distribution for my net worth. Yeah.
Okay. So that's what you're basing your kind of your expansion goals on, is your entire portfolio, stocks, real estate, everything, just the allocation that you have set aside for that.
Yes.
Yeah.
I can drum up some money in the financial markets typically doing some like derivatives and things. Yeah.
Way beyond my skill level there.
I'm building the software. I'm going to market my software. It'll be great. I will teach you. The initial thing is not like the scalable approach. It's like one-on-one coaching with people and then saying, hey, now that I've taught you how to trade stock options, I literally built the software to make this super easy and you can try it for free. Like, whoa.
I would love that. I've always like wanted to learn, but when I'm like hearing someone talk about it or something, I'm like, no.
Yeah, there's a reason why I'm in real estate. I don't understand any of the others.
Yeah. I'm like, I put like $100 into Bitcoin or whatever that was. I don't even know what's happening with that.
Probably have like $5 left now, right?
Yeah. So I'm like, no, it's just not for me.
So what's your plan for this fourth one? Do you have a specific like type of property in mind? Is it more so based on the radius? Do you have another cap rate profile in mind? Like what are you hoping to get for your fourth and, I'll say final for now until you start scaling up to the big ones?
Oh, I really want a complex. Oh, I want that so bad. So the progression that I've done is lower risk to higher risk. So given that if I'm going to put in-house management and then put in a partnership, I'm really going to actually need to shore up those cash flow, like the income streams type of thing. And I'll probably go for a higher risk property, but it still has to be within my 15-minute rule. It's my personal rule. Any property I can get to within 15 minutes. First one is like about, 10 minutes. Second one's about 12, 13 minutes. And the last one's full on 15 minutes. And they're all in the same direction, of course, because I'm not going the opposite direction, because now hypothetically it's like 30 minutes, right? Or whatever. So I can blow by all those properties on a motorcycle in like 30 minutes and actually like circle all of them. Spend a little bit of time, get off the bike, go check a utility room, go pull out a bunch of quarters over there. Sorry, it's really hard when it's reverse. I can't figure out that orientation. But the thing with the quarters is I don't actually mind, because the quarters tell me that if that fills up and no one has been there within that period of time, it's not managed correctly. So for the scale on a fourplex, right, 4 tenants, if those quarters fill up, that manager is not doing their job. Yeah. So I am over there checking anyways. It's real quick. I'm just like in and out, backpack done, whatever. And then I realized, the laundry room light bulb just burned out as soon as I turned it on. Well, now I got to change the bulb, So, there's different things. You see tenants, chat with them.
So that's your tell is how full is the laundry coin slot.
Well,
I like it. Yeah.
We'll have to like close and go immediately over there and open up that washer.
Oh,
I'm curious. I kind of wish.
Really
I think it's like the dryer has the coins, and then they just didn't put in a coin op on the wash. Yeah.
Yeah, one of them is coin operated.
Interesting.
Yeah. If it ever breaks, I'm gonna put in another coin op. Yeah. I don't mind. I just doubt. Some people hate this stuff. They're like, oh, I gotta lug quarters around or whatever. You get a little automated machine. Then the next time you go to a bank, which sometime in the year, you just deposit it, whatever. It's like.
Yeah, I'm one of those people. I couldn't care less about the laundry income piece. I actually just lease out my laundry space too. So just have someone else deal with it. Like if there's an issue, call that company.
Yeah.
Is it negative? Do you break even on that? Because I know there's a certain fee, right?
Yeah, I end up paying about $20 a month because I don't hit my minimum for whatever reason. But yeah, $20 a month, $250 a year to not have to deal with laundry machines breaking in my multifamilies. I'm okay with that. So
I would love to have a complex and then have my own laundry facility in the complex. I love having a basic business model. The simpler it is, the better, because then you can just focus on execution. And those laundry outlets, oh man, do they cash flow? So that's a scale issue. Right
there. Exactly. Yeah. And I'm not in the laundry business and I don't care to be. So so that's kind of my take on that. But yeah, if you can figure out how to do some sort of commercial laundromat and integrate it into your building, like, there you go.
Yep.
Get the manager in there.
Yeah.
That's what I pay for. Yeah.
That's awesome. Well, thank you so much for coming on and just kind of catching everyone up where you're at with your portfolio. And like Leah and I said, like, you're so fun to work with. I love hearing about your strategy. And we'll have to have you back to kind of give us an update on this Fourplex number 3, how that all turns out, and then what your plans for number 4 are.
Cool. Sounds great.
Absolutely. Well, thanks everyone. If anyone had any questions, feel free to reach out to me via email, Jenny@envisionrea.com or Leah@envisionrea.com. And we will have Michael's information in the show notes as well. So thanks everyone for listening, and we will see you soon.